Welcome, everybody. Good morning. Thank you so much for being here. It's a great joy to be able to share this time together to talk about loans and building projects as part of our Learn and Grow series. My name is Dustin Petz, and I'm a clergy here in the Great Plains Conference and also serve as president of the Kansas Area United Methodist Foundation. Let me offer a prayer. Gracious God, we ask and pray for your presence with us today. We give you thanks for the dreams and visions you have for your church and how we offer leadership and how we live into those to expand the ministries that we do, to make disciples of Jesus Christ, to transform the community and the world around us. Help us to be open to your spirit blowing. Help us to be renewed and restart in a way that makes a lasting difference for our churches and for the disciples that we serve. Gracious God, pour out your spirit upon us today and upon David as he presents. In Jesus' name, amen. Maybe you already know this, but the Kansas Area United Methodist Foundation began in the mid-60s as a partner organization for churches and families. Today, we serve more than 800 churches, organizations, and families across the state, providing investments, helping with charitable giving and estate planning services and loans. In 2019, the foundation decided to partner with the Wesleyan Investive, formerly called the United Methodist Development Fund, for our loan portfolio. Through this partnership, there's an increase in capacity and ability to serve the loans and the needs of our churches and organizations across the conference. Joining with us today to present is David McCaskill. He's the Senior Vice President and Treasurer for Wesleyan Investive. He brings 43 years of banking experience to Wesleyan Investive, with 22 of those years supporting churches in loan closing process and servicing. He currently oversees the management of more than $400 million in loans. And David, we're super excited to have you here today to present and to share with us. Thank you so much.
Well, Dustin, thank you so much. And I appreciate the opportunity to spend some time with you and go through the process. And like Dustin said, as you have some questions, please put those forward and we'll try to answer those at the end of the presentation. First of all, again, like Dustin said, we are very excited to be partnering with the Kansas Foundation in providing loans throughout the conference. The partnership has been going on since 2019, and we really believe that this has benefited both the foundation, the Wesleyan Investive, and like Dustin said, it was called the United Methodist Development Fund. But we believe that hopefully this partnership, focuses on the areas of expertise of all of us. Dustin said I've been working here for the last 22 years, working with churches and organizations as we provide loans for them as they try to reach their communities, try to grow the kingdom. And so it's been an exciting time for me. This partnership, primarily your contact is Dustin. Whenever you have some questions or whatever, then we come in whenever we start talking about the loans, but Dustin is again your primary point of contact. Just a brief history of many of you may have known the United Methodist Development Fund whenever it was under GBGM. The Wesleyan Investive is a separate organization. It has its own bylaws, its own board, the 501c3. But whenever it was with GBGM in New York, and we all remember that GBGM moved from New York to Atlanta, and whenever they did, they were trying to figure out a way, how's it better for this organization to benefit the churches throughout the United States. As part of the Texas Methodist Foundation, we serve at TMF, Texas and New Mexico, and have the largest loan portfolio of any foundation. So we came together and decided that the staff here at TMF would manage the Wesleyan Investive. And so that's how that started. We partner with all the United Methodist Foundations across the United States. The partnership we have with Kansas is probably the deepest and the broadest that we have so far, and it tends to be the one we point to others of how we hope things will work in the future. But the Wesleyan Investive continues to do traditional loans just like they have in the past. But along with that, what the board has done is they've expanded some of the things that the Investive is doing, primarily within the leadership ministry. I would point to you, if you have an opportunity, go to the Wesleyan Investive website. It's wesleyaninvestive.org. And on the top of there is the Tom Locke Innovative Leader Award. And this is the first award that was awarded this year. It was actually for 2020. The award ceremony happened virtually in 2021, but it's 5 individuals. They're very exciting, the work that they're doing, and we're really happy of the things that we've been able to do as it relates to that. So anyway, let me move forward on the types of loans that are offered here. Again, construction, renovation, expansion, purchase, refinance, all of those loans are the type of loans that we do. I will point out to you that the loans that we provide are all secured by a first lien on the real estate. So if someone was to come to us and we needed, they had an existing loan at a bank or at other financial institution, then we would talk about rolling that loan in as well. So anyway, the process, and this is where I want to spend a little bit of time talking about, is the Investive follows the outlines that are within the Book of Discipline. We all understand and know the district committee and their duties and responsibilities. One of the things that I wanted to point out is within the Book of Discipline, it talks about that you need the district committee approval on any project that exceeds 25% of the value, and I put in quotations, of that building, because that's what it says in the Book of Discipline. Many times, a church will come and they'll say, well, we're going to do a renovation project and our building's worth $1 million. But the building really consists of maybe 3 or 4 different buildings. And so technically it is 25% of the value of that one building. I will point out that many times when that happens, as an example, let's say you have a building that's worth $750,000 and 25% of that's $187,000. So, if you're looking at your whole building's, facilities, well, it may be worth $3 or $4 million, but that one individual building may not be worth, but $750, and you want to do $300,000 worth of work on it. Well, technically you would need to go to the district committee. Many times I will tell you, though, a DS is willing to waive that requirement. I just wanted to point that out to people that is out there. The approvals at the church level, depending on what's being done, whether it needs to go to a full church conference or whether you need, any other kind of approvals, study committees, building committees, those kind of things. I would tell you, though, to err on the side of more transparency in building projects than not. In the history that we've been working with it seems that if you don't have a church conference, or at least you don't have a town hall to talk about what's going on, then people don't feel included. And many times, they'll look back and go, well, we didn't know what was going on, or we weren't included. So, giving the people the opportunity to ask questions, to be included, and to, feel included is the main thing. So I will tell you also that we have a resource guide that's available from the conference, the foundation's website, or you can call Dustin or Joanna. So much of this stuff is in there. As we talk about and talk to churches, whether it's Dustin or whether it is myself or another part of our team, one of the things we want to do is we really want to understand your church. We want to understand your needs, what your goals are, because we're here to assist you in whatever your needs are, in whatever your goals are. And that's different from every church. So we're going to ask some questions, and talk about, tell us a little bit about what your vision is and what your ministry is for your church. And who is your church? What is God calling for your church to do, and who are your neighbors? And one of the things that's really been interesting is COVID has caused all of us to kind of look at things in a different light. Who are we today? That may not have been what it was like 18 months ago. How are we planning on using our facilities today and in the future? Many times that's very different than what it was 10 years ago, when we thought of, how a church might meet its community. Maybe the future is our facilities are, Mother's Day Out program or something else for the community. So we're going to be asking those type of questions of, what is your vision? What is your ministry for the church? What is your facilities plan? And, so we're asking the questions. We're not trying to necessarily be, we don't have the answers. We just want to understand what's going on with you. And then primarily, because we are a lender, we're going to want to understand, what is your financial plan? Tell us a little bit about your building, what your plan is for the payment of a loan. How do you conduct your budget? Do you have, a narrative budget, or do you do, something else? We have churches who have a non-unified budget, let's say. They have a budget that's for their ministry and for their operations, and then they may have a separate budget that's for building plans. That's okay. Just understanding what you do and how you do it is key to how we move forward in our process. We want to understand financial patterns. Do you have, do you receive 30% of your giving in the last quarter or the last month of the year? So we're going to want to understand that. And then at this point in time, we also want to talk about, have you set up a process for an endowment? I mean, there are times where people may not be able to support your project of what you're doing today, but they have the ability to give through lifetime gifts. And so, the Kansas Foundation is a great starting place for that discussion of how one might set that up, or if you've already got that set up, how do you reignite that and build that into something that is, positive for your church. So we're going to ask those questions and really want to talk to you about understanding those three different plans: your facilities plan, your vision and ministry, and then your financial plan. Now, as we talk about specific loan process, I know there are a lot of things that people used in the past of how you might qualify for a church loan. I mean, some people always said, well, you should never borrow more than 3 times your budget, or debt service, your loan payments should never be more than 33% of your budget. Other ratios that were talked about as well, you need 1/3 of your project in cash, you need 1/3 in a capital campaign, and 1/3 in a loan. And then, of course, where there always talks about loan to value, you shouldn't be over 75% or 70% or some number. I will tell you that what we have found, that those ratios are always nice to look at and to think about, but really what we found is how is the cash flow in the church going to be out there to make loan payments in the future? A great example is if you have a church that has, and I'll make up numbers, let's say you have a church that's got a $300,000 budget and they want to do a $500,000 or they need a $500,000 loan. Well, if you haven't planned for payments in your budget, you can't just automatically take 1/3 of your budget and allocate it to debt service. If you do that, you're going to give up something that you're doing. I mean, whatever it is, you may have to cut back staff, you may have to cut back a program, whatever that is, and that's going to be a detriment. So what we've really found is that modeling all aspects of a project to determine a safe debt limit works the best. Again, that is outlined in our in that resource guide. It's on page 18 and 19. I wasn't going to put it on this because it gets really, really busy, but I'm going to just kind of talk in general about the process. So the process is we look at what is the current status of the operating budget today? Do you have any cash on hand for the project? Do you have any debt outstanding today? If you do, how much are your loan payments for that? Do you have a capital campaign either in process or planned? And so our whole goal is to look out into the future to say, after you have completed your project, after you have collected your capital campaign, how much debt is going to be left over? And how do we best plan for those payments within your operating budget over a period of time? Typically 3 years. Most of us who have done a capital campaign know that a capital campaign pledge period is 3 years. Sometimes it's 5, sometimes it's shorter, but typically it's a 3-year pledge period. So what we look at is to have our process in place so that we're planning for those monthly payments in your operating budget. Typically we structure a loan so that there is a 3 years worth of interest only, followed by a 20-year payment plan. So that process of building debt service in your operating budget works well. So whenever we start working with your church, one of the things we're going to do is we're going to build this cash flow model for you. We're going to talk to you about all of these different aspects of the project. We're going to talk to you about a capital campaign. Are you going to be doing a internal campaign, or are you going to hire somebody to lead it for you? That is always not a sticking point, but a question that will have to be answered at building committees. I mean, I've heard it many times. Why should we pay somebody to help us raise our own money? Well, typically whenever you use an outside consultant, you're going to raise more dollars. You're going to collect a higher percentage of it. And, if you do it yourself, and that's great. Many people have done it themselves and they've been very successful. But somebody's got to do all this work. And typically it falls on the pastor or the business person in the office. And quite frankly, you guys have other jobs. So, who's going to put down what? And, if you have a volunteer on staff, then, on a committee, that would be great. But a lot of times we all know it's hard to keep volunteers headed in the right direction. It's like herding a bunch of cats at times. So we have found that, using an outside consultant does raise more money. And a good capital campaign, if it's done properly and it's done, with the really a buy-in from everybody, it feels more like a revival, if for lack of a better term, than anything else. It feels like it's building excitement for the church. But anyway, I've preached enough on that, but I would just give you that advice that as you think about that you might engage someone who has experience in that. And I think we also want to set the expectations properly for a project. Building a cash flow model and how we work with a church helps with that. I have sadly been in situations where a church has talked about what their project and what their needs are. They've got the drawings on the wall of what they're going to build. Sometimes they even have the little model that's sitting there for everybody to see. And they've had their capital campaign and people have pledged towards that capital campaign with the full expectation of this is what we're going to get. And in reality, they can afford about half of it. And then all of a sudden there just is a letdown of, well, that's not what we thought we were going to get, and that's not what it's going to be. So I would suggest that if you're looking at building something, that you reach out to us and let us help you set those expectations of what you can afford. Now, on a renovation project, on those kind of things, that's a little different. But anyway, you want to set the expectations for whatever you're doing. And when we discuss a project, or whenever we're talking about all of that, we want to talk about an all-in cost. What is the construction? Are there going to be fees to the local city, county, whatever it is? Are you including all your furniture and your equipment? I mean, the last thing you want to do is do a really great renovation project and either bring in all your old furniture and, or not have your furniture in there, and it would be great to think that a lot of times we're going to have XYZ Sunday school class provide their own furniture and whiteboards and whatever it is, and they may. But at the same time, you want to include that in your project to be sure that you have that in there. And then a lot of times from a local level, people don't include or don't think about, what is the expectation from the city on your landscaping. Are you going to be required, because you're doing a renovation of this building, to now you have to put a sprinkler system in the building that you didn't have? So including all of that and talking about what is that all-in cost is really important whenever you're doing all of this. Specifically on how we structure loans, all of this stuff that we talk about is going to be very similar between what we do and what a financial institution does. There are going to be some differences. I'll try to highlight those whenever we go through this, but they're pretty much the same. We fund our loans from people who invest with the Kansas Foundation in their program and allow us to make these loans. So, we're going to be very careful in how we do all of this, but our structure, the biggest difference is typically, like I said before, we offer a 23-year loan where the first 3 years is interest only. That interest only is on the amount that is drawn. So let's say you have a $300,000 loan and you've only drawn $25,000 on it. The next month you just owe whatever the interest was on the $25,000 that was drawn. You don't owe on the entire amount, just on the amount drawn. It allows for the collection of your capital campaign or your fundraising effort. It allows your project to be completed. And then in addition, it allows us to then work with you to project out in 3 years, what is that loan going to be like? What is the balance of that loan going to be like? So if we need to build in $1,500 worth of monthly payments, then maybe the first year we sit down with the finance committee and with the church and we say, we need you to put $500 a month in loan payments in. The next year, you need to put another $500 in so that you've got $1,000. And then the third year, you add another $500, and now you've got $1,500. Is $1,500 going to be absolute magic number? No, but it's going to be close. And the difference is you don't want to wake up one day and you've got $1,500 a month payments and you hadn't planned for it. So that's where we work with the church in this interest-only period, and it's a one-time close. So you close it once, interest-only period. After 3 years, it rolls immediately into a P&I period of up to 20 years. Doesn't have to be 20 years. It can be 15. It can be whatever you want it to be. It just typically doesn't exceed 20 years. We don't have a balloon. I mean, a lot of times with a financial institution, you may have a 20-year amortization period, a 25 or a 30-year, whatever it is, but you may end up with a balloon at 15 or a balloon at 10 or a balloon at 5. And typically, whenever you have a balloon, it means you have another closing. So you've got to go through paperwork again, and you've got to do all that other stuff that you had to do in the first place, and it just costs more. So what we've found is that if we do a one-time close, then we save some of that cost to the church. The rates on the loans that we provide, a lot of times the folks that are sitting around in our committees, the experience that they have with loans and real estate loans are related to what they've done with their home. It's a 30-year fixed rate loan or a 15-year fixed rate loans. Typically, the loans that a church will get from us or from a financial institution are not going to have 15 or 30-year fixed rate loans. They just don't have those. Our home loans, all of the loans that we have on our individual homes, get packaged and sold into the secondary market. So the local financial institution doesn't keep those mortgages on their books. They sell them, so they don't have that risk of keeping them on their books for a long period of time. We don't have that opportunity, and a local bank doesn't. So typically, they will have some kind of period in there where you have a fixed rate. It may be 3 years or it may be 5 years, but every 3 years or every 5 years, the rate is going to change. The rates we offer are typically associated with Wall Street Journal Prime. The reason we do that is it's a well-known thing. You can go into the newspaper, you can go on the internet, and you can find out what Wall Street Journal Prime is today. Some banks will offer a rate that's tied to LIBOR. We found out that was a manipulated rate, and so now they're doing something else. But all of the rates that we offer are tied to Wall Street Journal Prime. One of the things that I would also point out that, and again, whether or not it is working with us or working with a financial institution, Dustin and all of our staff are first and foremost committed to how do we help you guys. If you come to us and you tell us that, I've got a local bank that's going to offer me a 20-year fixed rate loan at 2.75% with no closing costs or with a maximum closing cost of $1,000, Dustin and I are going to say, good for you. You need to take that. And, so it's important for us to work on behalf of the local church. I will tell you, though, that when you do that, be sure you read the documents that they provide you. We have found in the past that if you pay your loan off early, especially if you're going to refinance it somewhere else, there are prepayment penalties. And, so you just need to make sure that you're understanding what the bank is offering you. And many times it's a great deal, and sometimes when you read the fine print, it's not. The loans that we provide never have a prepayment penalty. You can pay it in full or in part at any time. You can pay it down. Let's say somebody gave you or left the church $100,000 and you wanted to pay the principal down. Well, you can pay the principal down and you say, well, can we re-amortize it to lower our payment? Well, certainly you can. So we're happy to do those kind of things. You just need to be sure that you're asking those kind of questions whenever you're working with your local bank or your local financial institution. One of the things that I will point out to you in the loan process, the earlier you start out, the better. There are many times when a church will have cash on hand. They've been building up money for years to do this renovation project or this whatever it is. And so they get started. And they've talked a little bit about, we may need a loan, but we might not. We're going to ask everybody to donate to, over and above gifts so that, we're going to, but things will be good, but a lot of times not. I would suggest to you that if you're going to do a project, it doesn't cost anything to get to make loan application. It doesn't cost anything to get approval. It starts to cost whenever we close the loan, but in reality, it doesn't cost that much. Our typical fees that we charge, which we provide all the legal and loan documentation, we have to do a flood survey and we have to do a bunch of other stuff, filing fees. But what you reimburse the Wesleyan Investive for is about $500, $400 to $500 is about it. Now, we do need a title policy. I don't know what a title policy costs. It's different in every state, but typically it's a couple of $1,000, I'm guessing. But our fees is about less than $500. What you don't want to get in the process of is, we're working along, we have a bunch of cash, and then all of a sudden you decide you need a loan. And now you make a loan application, whether it's to the bank or to us, and you run out of money and the contractor's got to stop. So if you have your loan in place, even if you don't draw on it, then it hasn't cost you much, but it's at least there, it's insurance. You just don't want to get into that position where you have to stop construction and wait till you get a loan approved. Our process, like I said, typically we have a first lien on the real estate so that, we're going to require a title policy. We don't normally require an appraisal, so that goes pretty quickly. And unless you're changing the footprint or you're adding a building, we don't normally require a survey. So we can get away, again, we're just trying to save you costs. We don't want you to spend a bunch of money on us and on things that are not ministry related, and whether that's building or renovation or what are those kind of things. Our process that we follow is that, there's a loan application that is, I believe, on the Kansas website. It's a fillable loan application. We're going to, Dustin has gratefully agreed to meet with us tomorrow as we look at our loan application and try to make it probably a little more streamlined and a little more meaningful. We haven't probably done that enough, but he's agreed to help us with that. But we get a loan application. When we receive the loan application internally, and we're going to assume everything is there that needs to be there, then we present it to loan committee. And then once we get it approved at our loan committee, we issue a commitment letter. And then in that commitment letter are going to be all the terms and all the conditions that we have already discussed. And it may be that you need to add $500 worth of loan payments in the next 3 years, but it's going to be outlined in that commitment letter for all of us to know what is required of us, know what the finance committee is agreeing to, know what the trustees are agreeing to. And then you're going to return the commitment letter to us. In that commitment letter, there's going to be a checklist. Here are all the things that we need in order to close the loan. If it's a building project, do you have a bids on it? Do you have a contract yet? All the different things. And if, in our initial conversations, when we're talking with the church, we can provide you with the checklists so that you know what to expect. But, the biggest, then once we get the checklist and we get all of those things in hand, then we're going to produce the documents. We're going to send them, to the title company to close, and it's going to be everything that is required by the book of discipline. The district superintendent's going to have to sign, the pastor signs, an officer signs, all those kind of things. I will tell you that the biggest holdup is getting things back, quite frankly. We can move the process and we can move things along pretty quickly, but typically we're waiting on things. It would be helpful as you work through this process if there is someone, and it's not the pastor, because the pastor has another job that he or she's trying to do. But if you have someone who is, on one of your committees that has a background that can work through this and be the point person to say, we've got all this stuff. Because quite frankly, a lot of times it's, we're going to talk about it at the next committee and then so-and-so is going to get it. Well, we all know what work is on a committee. It's the next month that it comes up and everybody's forgotten it and they scramble around and, so if we can have that, then we can typically from the time we receive the application to closing about a month. I know that sounds like a long time, but it goes pretty quickly when you're trying to get things back and you're trying to get things in order and get title closings and all that things kind of set up. I say all of that just that so that you know in your process that if we want to start construction in September, then let's work our way back, knowing we got a month or a little more to try to get our process in and our application in and approvals and closings, and then let's work backwards. So if we're thinking we're going to do a project and we want to get started in September, then we probably need to start having a conversation with Dustin and with the Investive probably in March, so that we can have plenty of time to understand everything that's going on. Yes, can we jump through some hoops quickly and get things done if we have to? Absolutely. But a lot of times that means we're putting somebody else aside. So I just want to make sure that we all understand the process of what's going on. Again, there are a lot of advantages to working with Dustin, working with the Wesleyan Investive. We understand the United Methodist Church. We understand that sometimes at the local level, things change. A pastor that has been there for a long time gets moved. And I know it's going to be a surprise to everybody on the call that when a pastor moves, sometimes the next one is not the one everybody wanted. And so people sometimes vote their displeasure with their pocketbook or their feet until things settle down. Well, we understand that those things happen, and we can work with the church and work through some of those issues. We also understand, that we can be flexible in how we're working through some of these issues. COVID is a great example of what happened. All of a sudden, all of our churches, we can't meet in person. People are trying to scramble around to try to figure out, how do we do this online? How does our congregation now meet online? How do we receive the offering online? There was a lot of things that were going on all at the same time that we were all trying to scramble around and try to fix. Well, one of the things that we did from an Investive standpoint is we immediately reached out to all of our churches and said, look, if you want to, for the next 3 months, you can basically just skip those payments. We'll just add that interest onto the end of the note. You don't have to make it you'll have to make the interest sometime, but you don't have to make it today. So spend that money and try to get things online in the next few months. Of course, we all thought it was only going to take a few months. Who knew it was going to take 18 months? But it did. Well, then the board realized that as well and said, look, then let's offer then all of our churches, you don't have to make your full payment. All you have to do is make interest payments. And so we had a lot of churches that offered that, and that gave them some relief. So again, we believe that we understand the United Methodist Church. We believe that it's important that your congregation has a great relationship with your local foundation because of the benefits and all the things that they can add. And again, we're here first and foremost for you. We're not here to try to enhance the bottom line of our shareholders. We're here to try to help the church, try to help enhance our leadership ministry that hopefully will strengthen the United Methodist Church throughout. We have, as a matter of interest, done everything that we need to do so that if a church decides that they don't want to stay with the status quo of the United Methodist Church, we can work with all the churches we've worked with in the past, in the future, whatever that looks like. If a church wants to stay or go, we can work with them. Because again, it is all about the local church and how do we help that church.
David, thank you. We are going to take questions. So if you have questions, if you'll open up your chat window and you can dump those in there, and then we'd be happy to visit. Can you share a little bit more? I'm hearing a couple of things that you've got licensing in Kansas and Nebraska, and what I most appreciate, I guess, is just a shared values of we're looking out for what's best interest of our local churches and their ministry. And that's in part why you, in your process, focus on cash flow, is my guess. It's not about what growth can happen for Wesleyan Investive. It's how do we help the church continue its ministries. It would be horrible if you set up a project and had a loan and then could not meet your normal operating needs. But you're seeking for us to continue to grow in ministry and to make a difference in our local communities and the mission that we're called to by God.
That is absolutely true. I think, from our perspective, our core value, our core purpose is to help the church achieve her God-appointed missions. So the church, your local church, and God-appointed missions is whatever that God-appointed mission is for that church. And then we try to do that through our core values of servanthood, integrity, and competence. So, we believe that we have a staff that is competent, that we know how to do loans. We've been doing it forever. But yet, if there's somebody else out there that's better than us, then you don't need to use us just because we have Methodist in our name. And, servanthood, we need to be putting you first. And integrity, we need to be doing the right thing. And again, if the right thing is leading you to the path of borrowing the money or helping you do something else, then that's what we need to do. And quite frankly, sometimes the answer is you can't afford this. And here's why. And because if you do this, here's the potential that you would run into. Like Dustin said, the potential is all of a sudden you're going to be sacrificing your local your programs, and that's why people are coming. And yes, does it work sometimes? If we build it, they will come. Sometimes, but not always. And the thought of doing that and planning for that is, we can talk about that, but it doesn't always work. Most of the times, it doesn't work. It's all about what are the programs the church is offering? What are the ministries that we're offering? How involved are we in the community? Those kind of simple things, hard to do, but that's what people in the community are working for.
Yeah. I wanted to share, and correct me if I get something wrong, David, but when we began this partnership, in a lot of ways for us here in Kansas Foundation, it was they have licensing, they have the expertise, they have larger capital resources to be able to do things well to serve our churches, and yet we still have a part to play. So as David shared earlier, if a local church takes out a loan and the funding comes from Wesleyan Investive, our foundation, through our certificate of participation, makes the investment to help make that happen. And so there's still ways that we are in service and in connection with our local churches or our families. So we have certificates of participation, which are investment mechanisms similar to a CD at a local bank, where you get a fixed rate of return, and they're 1 year and 2 year investments. It's not a gift, it's actually just an investment that we can make available, and are able to participate in this program and this relationship with the Wesleyan Investive, which I think is helpful both for churches that want to invest as well as for those that are individual families that would like to invest.
And like Dustin said, we do have, we're licensed in all the states that require us to be. We provide loan and investment services, either through or in partnership with a foundation like Kansas, or in a state where we don't have that relationship, or the foundation doesn't offer those programs. So we offer it all in all 50 states, including Guam and Puerto Rico. I will tell you, we have a loan out in Puerto Rico and in Guam both. And unfortunately, I haven't gotten to go see those churches. I keep trying to tell them I need to make that trip, but just can't convince them to do that. Or to get somebody to apply in Hawaii, and can't do that either. So.
There you go. We actually have a question that came in. So I'll read that, David, if that's okay, and then you can offer your thoughts. So the person asks, if we start building at the beginning of a 3-year capital campaign, would a construction loan be a good choice? Or would it be better to go with a loan for the whole outstanding balance through the foundation and take advantage of the 3-year interest-only period?
Typically, we would set up a construction loan. We would be working with you, and again, through this cash flow model, we look at what is the total project. I'm going to say $1 million, and then the church has $200,000 worth of cash, and then they have pledges of another $400,000. So in theory, you think you have $600,000 worth of cash and $200,000, 600,000, 400 in pledges and 200 in cash, that you're going to need a $400,000 loan at the end of that. But you're not going to collect your capital campaign all up front. Certainly you don't need to, you need 800, you don't need 800,000, more than 800,000 because you have cash. But somewhere between that, we would work with you and say, you're going to need a loan of say 700,000, some number. And so we set up a construction loan for 700,000. You draw on it as needed. The goal would be that you don't draw on it unless you need. We're going to use your cash first. We're going to use the money raised from the campaign next, and then only draw on the loan if you need it. The whole idea is to keep your interest cost as low as possible. And then the project gets complete. Let's say it takes 12 months to complete the project. And then as your capital campaign continues to come in, then you're going to send those dollars to us, and we're going to pay the principal down, so that at the end of the 3-year period, then you end up with whatever loan you end up. The thing that we need to remember is, let's say you have a $400,000 capital campaign, $400,000 in pledges. As much as everyone that is making those pledges is fully intended to honor those pledges, life happens. People lose their job, people move, so you're not going to collect all of those. Again, as we work with the church through our modeling, then we may work on an 85% collection rate, or maybe a 90% collection rate. We may be asking the hard questions. We're not going to want a list of all your people who pledge. But let's use this same thing as if you had a $400,000 worth of capital campaign, and one person or one family is $300,000 of that pledge. Then we're probably going to want to understand a little bit more about their capacity and how they're able to do things. Because if for some reason that doesn't happen, then that would have a significant impact on the loan balance and on the ability to make loan payments. But again, the loan that we close up front, while it's a construction loan, then at the end of the 3rd year, it just would automatically roll into a permanent loan without having to do a second loan or another closing. So it's just a one-time close.
So it's an interest only, using the cash that might be already in hand through the course of that construction, maybe even through the course of the capital campaign period, and then rolls. And so just automatically rolls. So you do like a 3-year plus 15, for an example, and then intend to do 15 years of principal and interest payments that in the preparation we've discerned that the church can afford. We can roll that into our budget, or we've got a mechanism to make those payments on an ongoing basis.
Exactly. So whenever you look at the full term of the note, it may be, when it says final maturity, it may be 23 years from today. Or, and like you said, it could be that a church would rather have a 15-year note. So it's an 18-year maturity. We're open to that. And there's some times that we've had a church, and again, flexibility comes into play here, is we have a church that we've just worked with, and they need a $300,000 loan, and to do, let's say, $500,000 worth of improvements. They've got some cash, and they're holding a capital campaign today, and they think they're gonna raise, or they've got commitments already for $150,000. So at the end of 3 years, they're going to have hopefully about $150,000 worth of debt remaining, but they've already committed today that they're going to hold a second campaign, and they think they're going to raise $150,000 then. So at the end of 6 years, they're going to owe zero debt. Well, okay, so that's understandable. So we're setting the loan up for 6 years worth of interest only, but provide for whatever that is, 17 years worth of P&I term. So the whole term is still 23 years. So the flexibility that we offer is still there.
So you don't you want to set them up so that we have a alternative option if things don't go like we hope, that we can roll it into a P&I process and continue to make payments and reduce the debt over time, and not get ourselves stuck to where, oh, we're gonna have to reapply and pay all those fees up front to get into the next stage.
Correct. I mean, because we don't have any prepayment penalties, you can pay it off anytime. But again, it's, the hassle of, and the inconvenience and the cost of having to fill out a whole new loan application, get reapproval, pay attorney fees, a new appraisal, get a new title policy. We're trying not to do that. And we're trying to help the church the most cost-effective way.
Very good. We don't have any more questions that have come in. In the event that you do have questions that come in, you're welcome to send them to Joanna or I, and we can get them to David. The normal process that has happened for the last couple of years is, if someone is interested in a building project or a loan, they'll reach out to us here at the foundation, and we'll make that kind of initial engagement with you, and then I'll help introduce and connect you to David. Our role kind of is more as a cheerleader and helper on the side, where the main relationship and application would be with the Wesleyan Investive, and can be that local front and connection to you. So if you have questions that come up, because we're not receiving any of those here, we'd be happy to send those to David and get a response to you, and be able to help address the issues that you're facing. And I'm just super excited. The desire that we had from the foundation was to partner with those entities that have great strengths, and we don't have to be the only entity that does things, and there's others that do it better. So let's build relationships and help be the connector to those great resources for our churches and for the ministries across the Great Plains Conference. David, I want to thank you. It's been a great presentation, and I appreciate your insight and our partnership and the service you do for the larger church and for us here in our relationships in Kansas. We appreciate you and your expertise and the opportunity to serve together. So thank you so much. I want to thank everyone who came and joined with us together today, and the opportunity to share in this presentation. I pray God's blessing upon you as we continue this summer. We give you thanks for the ministry we do together. I give thanks for the Wesleyan Investive and for David and his partnership. I pray God's Spirit be with you as you go. Thank you so much. Have a wonderful day.
Thank you.
Thank you. Bye-bye.